Welcome to another episode of the New York Alternative Investment Roundtable Lunchtime webinar series. My name is Jason Eisman, Assistant Vice President at Hub International and moderator for the webinar series. Today's episode is Building the Team Behind the Returns, Talent and Operating Decisions that Institutionalize a Firm from $1 billion to $5 billion. Scaling past $1 billion isn't just a capital story, it's a people story and an operating story too. Today's panel is going to get into what to build in-house versus outsource, when and how to add people, how to develop and keep the team you already have, and how to pass allocator operational due diligence without overbuilding. Before I introduce the panelists, a few housekeeping items that I want to go through. For those of you who are new or unfamiliar with the Roundtable, we're a nonprofit organization whose mission is to provide a forum for thought leadership and knowledge sharing in the alternative investments industry. We do this by hosting monthly in-person events and online webinars such as this one. Special thank you to our sponsors. It's with your continued support that we're able to continue to do the in-person and online events. If you're curious about learning more to become a sponsor or a member of the Roundtable, please reach out to me or go to the website ny-alt.org. This webinar is going to be recorded and it's going to be uploaded to the Roundtable's website after the webinar episode. Last but not least, we're going to be using the Q&A chat function at the bottom of your screen. If you have any questions during the Q&A, please feel free to post your questions there. And at the end, we're going to host a 10-15-minute Q&A where we will go through the questions in the order they were received. Now, moderating today's event is Kurt Kim, President and COO of Aruta Talent Solutions. Over a 25-plus year career in alternative investments, Kurt was partner and COO CFO of Promethean Capital Group and its affiliates, where he built and operated a multi-strategy credit hedge fund complex and a FINRA-registered broker-dealer. He also founded and exited an award-winning fintech. He's also co-author of the forthcoming book, Return on Talent Principles, Shifting the Mindset from Cost to Investment. Joining him, David Bradley, COO of Hawk Ridge Capital Management since 2013, a nearly $4 billion long-short equity fund. Before that, David spent 8 years as COO, CFO, and CCO at Sirius Advisors, which managed healthcare equities for the Bill and Melinda Gates Foundation, and later ran a long-short fund. David is a CFA and Kaya charter holder. Yulia Peruzzi, COO and CFO of Almightis Capital. She was previously COO and CFO and CCO of Caden Capital Partners, a spinout from MSD Partners, and before that, CFO, CCO, and Managing Director at Sepio Capital. She previously held controller roles at Partner Fund Management and Bridge Capital. Yulia is a CPA, a CFA, and a CGMA charter holder. Lastly, Chris Lillis leads Aruta's Talent Solutions practice. Chris has spent his career placing talent across asset management, investment banking, and quant finance with prior leadership roles at Jackson Lucas, PJT Partners, Two Sigma, and UBS. Kurt, over to you.
Great. Thank you, Jason. And thank you all for joining us today. You're in for a treat. So Jason covered our backgrounds. So I'll just say this about the lens I'm bringing to today's discussion. I've spent my career on both sides of today's conversation. On the one hand, the operator asking for the build, and on the other hand, one of the partners fund it. Now, for those of you who are unfamiliar with Aruta, let me give me a few minutes here to give you a quick overview. So at Aruta, we have a very simple core belief, and that is that talent is an investment to be made with an explicit expectation of return. So not a cost center to be minimized. The firms that treat it that way tend to compound. The firms that don't tend to stall. And we think about that investment across 4 pillars. There's hiring, development, retention, and transition. And there are a lot of levers underneath each one of these. For example, hiring isn't just a full-time search. Development isn't just training. We help firms pull the right combination of levers to address one or more of these talent pillars. So simply put, you can think of Aruta, or I would say that Aruta is defined by 4 elements. We're alts only. We're built from operator DNA. We're not a talent firm who learned this industry. We've actually lived it. We think about talent holistically, frankly, because we can. We help firms across all 4 pillars so we can engage on a much wider range of talent needs than a firm built around a single service line. And then finally, we advise and we execute. One, the other, or both, based on our clients' needs. So together, these elements make us unique in the marketplace. So now, with that, let's get into it. So our title today, as Jason mentioned, is Talent and Operating Decisions that Institutionalize a Firm from a billion to 5 billion. I'd like to challenge the second half of that first. The dollars aren't the variable necessarily. Complexity is product proliferation, more demanding LP base, expanding regulatory surface, and the things that frankly got away with early stop being survivable. Being one deep in a key seat is a footnote at 300 million. It's probably potentially a redemption trigger at 3 billion. So size certainly correlates, but it doesn't determine. Now, the other word in our title is operating, because this isn't only a talent conversation. So you can hire perfectly into a structure that you've already outgrown, and frankly, all you've done is add cost. So let's start there. 30 seconds each, guys. When you hear a firm described as institutional, what are you actually looking for? David, if you could start us off, please.
Yeah, I mean, I think institutional first is spectrum, right? It's not a black and white thing. You don't just one day, go from uninstitutional and non-institutional. But I think one test could be, if you're in my seat, like, are you critical to any process, right? Like, what happens? Like, is the firm okay if I'm not there for a period of time or not in the details or too busy doing something maybe on the tip of the spear of what the firm needs to be doing rather than the recurring stuff? And so, do those recurring things operate well while, I don't have the time to be involved or, responsible. And I think that's a key test is sort of like, the person who's, leading the ops team, does it work in that scenario?
Yeah. Okay. Yuli?
Yeah, I've now seen it from different perspectives, from different sides of the organizations, and it's always the definition holds the same. At the $5 billion platform, you have a well-oiled process where everyone knows their role. They have a very documented, regimented process. Everyone goes through layers of review. However, at a smaller firm, it's the same discipline. You just have fewer people carrying it. What does not change is the question, would this process survive the person who runs it and walking out of the door, right? When there is a change in management. Headcount overall is not the answer. The design of the process itself is what really matters. Chris, you get to see this from different sides of the outside across a
Yeah.
lot of firms. What's your perspective on it?
Yeah, I mean, from the outside looking in, I mean, I try to get to the bottom of it. My first conversation with a new client, and you're right. I mean, it has nothing to do with headcount numbers. It's about like who owns the function. If I ask that question, I get the same person's name over and over again. To David's point, even as I drill down on more granular tasks, then the firm might not necessarily be institutional. Let's say. So from the outside looking in, to me, like institutional means the org chart actually describes something real.
Okay. So you've got 3 different vantage points, but what I'm hearing is one test. Can the work survive the person? So that's the most important takeaway. So, David, you've been in the COO seat at one firm for more than a decade, which means you've seen the entire arc and frankly driven the transformation from the inside. What was the first real signal that the model that you had built was now sort of the thing that potentially holding the firm back?
Well, it's always tough, right? Because when you're growing from where we were, I joined the fund when we had 90 million under management. I was the first COO. The investor base was starting to get sort of like on the low end of institutional people with actual operational diligence groups rather than just friends and family and that sort of thing. So, in the early years, we didn't know how much capital we were going to raise. We didn't know about performance. We were always trying to be as frugal as possible. And as we kind of made some, had some success going from 90 to, 250, 500, I think that things were getting a little bit stale. Like things were definitely not institutional yet. Things were too much in my court. The people I hired, weren't taking on entire verticals. And so a lot of those verticals still stuck with me. And, gosh, it was just, it was the little things. It was like, how responsive can I be? If any one of those people I actually had on my team went on vacation, like, was I dying? Were there
The answer is
reasons?
yes.
Yeah, yeah, no, I was. That's why is my hair so white when I'm 45 years old? That's,
Join the
that's
club.
why. That's part of the reason why. So at the time I was like really trying to help the firm be profitable, not overhire, and but quickly we realized, it was really time to start to build the team, and potentially, in expectation of future growth. And if we hadn't done that at the time, I don't think that we would have seen what we saw, a few years into building the team. Because when we started to talk to larger institutions that had, even more serious operational diligence groups, one of them, told me, "Gosh, if you hadn't started building this team, like you would have been uninvestable, right? Like we're not going to invest in a fund where too much falls on one person." So, I think everyone has a key person provision for their CIO and their docs. Sometimes I joke around with other COOs that, especially at smaller funds, that they really should have one there too, potentially.
Absolutely. Yeah. So,
So, gosh, as things are uh, growing, right, you start to think about building your team, and that's not always easy. I found that going to one's personal network had limited value, and we, really benefited from recruiting over time. I'd imagine when people hit bottlenecks, that's probably something that is when you get calls, Chris.
Yeah, no, absolutely. And usually it's a frantic call, but it's hey, I need a CCO or I need a head of operations, and sometimes that's absolutely the right answer, right? But before we kick off a search, my approach is to really sort of just pressure test the opportunity, right? Obviously, you're going to tell me, what your ideal profile looks like and what the experience you want is, and I would then pivot to asking questions that I would get from a passive candidate when I approach them about the opportunity. And these are things that are like need to know before they even consider entertaining the opportunity. So, why does this role exist? What decisions will I own? Who am I going to work closely with there? Who am I going to learn from? What's the runway for the next 3 to 5 years? Like successful, what can that look like long term? And if the firm hasn't, clearly answered those questions up front, recruiting and headhunting isn't usually the problem. The opportunity just hasn't been fully defined. And if it's not defined up front, the search has a much, much lower probability of netting the right long-term hire. So, Kurt, I think to your original point about structure versus people. I mean, before you hire, you have to clearly define the role and what the actual responsibilities that you need filled are before you're asking somebody to step into it.
absolutely. I mean, look, founders rarely outgrow their people. They do outgrow the structure their people are working inside of. So Yulia, you walked into a spin out. There was no structure to outgrow. Different problem entirely. So what did you have to decide in the first 90 days?
Yeah, a lot of decisions need to be made. It is absolutely running to the finish line for the launch. Can't usually push back the launch date. Everyone is waiting. The advantage is, of course, you're not undoing anything. You don't need to reevaluate anything. You don't have the running machine that is not stopping at any time. But the disadvantage, of course, there's a lot of decisions to be made, and they all need to be made at once. You're juggling all these vendors and people and structures and policies. Just a lot to do before the launch actually happens. But before you decide any operational or make any operational decisions, I usually ask myself three questions, and those answers will be different for different managers, for different structures, for different product design. Well, first of all, what are you trying to build? And what you're trying to build is usually kind of the view of the portfolio manager, where the fund is going, where are you going to be in 3 years, maybe 1, 3, 5 years. Um, and it is a strategy question. Are you planning to be a $5 billion hedge fund, or are you planning to stay small for a while and develop your strategy? And a lot of times people skip it because it feels a little bit early to ask those questions. But every operational decision you're going to make it's gonna hurt you downstream if you're not making the right one. Redoing something and ripping out the system while it is running, while you have a daily operational needs, is much harder than if you make the right decision, choose the right vendor at the very beginning when you're launching. So you're building for the fund you intend to have, for the LP base that you're planning to have, for the amount of resources that is available today and looking into the future. But those are decisions you have to make first. Now, second, what do you actually have as a resources, maybe as your contacts where you have the biggest leverage, who's on your team, what they can realistically do. You really, as a manager, need to know your people, what is their gaps in knowledge potentially, where there is strength. And in the beginning, you always play to those strengths, and which providers you have, right? Which, providers, how their systems actually work. Are they able to maintain the system that you need? You have to think about administrators, auditors, custodians, systems overall. Is there anything you're going to build internally? Is there unique reporting requirements or structural requirements that you have? And that is your real starting point. And it almost always narrower than the plan that you assume in the future. Now, the third is how complex is your structure, right? How many vehicles you have, jurisdictions, where your people situated. It can be HR problem, and complexity is the variable. Where's your complexity of the fund? And that is going to be unique for each structure, be that on asset classes, on the allocation, on the people structure, just really a variable. But once you have collected answers to the question, the sequencing is a little easier to understand. You evaluate the vendors, you evaluate your internal structure, you evaluate your relationships that you've built through the years, and then you kind of start building. I also find it really important that everyone is aware of what you're doing, be that vendors internally, or outsource. I find myself like repeating over and over again what's going to happen, how the launch is going to happen. Are you spinning out and taking assets, or you're just starting all fresh? All of those questions are important. Your legal team should be heavily involved, your compliance team should be heavily involved. So everyone just needs to know what's happening and when. And there are questions that you should get right from the beginning. Certain things you can build later. So focus on the core items that potentially your LP base is going to look, but also important risk factors that you should have kind of internally already thought through. Those usually are cash control, your valuation policy, if you have difficult to value securities. What your approval process looks like, what are your controls actually within the system, and how you're recording all the activity and why. Those are expensive questions to answer later if you don't have it, if you lose those LP meetings because you just don't have proper controls. So make sure you're doing those early enough, and later you can, additional reporting can come in later, maybe dashboard, some UI experience or other things. But first, make sure your risk is covered by the proper controls.
Thank you. So let's continue and get concrete about the order of operations. I'm going to stay here with you, Yuli, for a moment. So you came through the controller seat, later sat in the CFO seat at a $5 billion platform. So you've seen this from both ends. So firm at this stage has one finance hire to make. Is it a controller or is it a CFO? And I'm going to ask all the panelists here to be a little bit less thorough in the responses.
Yeah, absolutely. It's a very difficult question, and perhaps my answer is going to be not so, not what everyone wants to hear. But I would say if you can find a very well-seasoned controller, it can be a right decision for the firm first. You do need to look at several variables. Again, what is the structure of the firm? How complex it is? Is your controller seasoned enough to get those relationships set up? Do they have enough context in the industry? And again, controller title is wide. There is just a lot of controllers who are called controllers. I was a baby controller at my first firm, but the $5 billion hedge fund, I was wearing a lot of hats and was privy to a lot of conversations and had a very different, really responsibility set. So I would say controller first and then CFO later. At this stage, it's sort of resources and a size problem, and later you might need more seasoned people at the helm. But you also have an ability to grow your CFO. So if you can get a controller that has a lot of responsibilities that they've carried, they've built those relationships, they can assess the structure, they can assess the risk, they can find the right providers and really build the operational layer, then it is a right answer at first, and you'll be able to grow that person into a CFO.
Yeah. David, I suspect you might sequence this differently a little bit.
I mean, potentially, right? It really depends on the structure
Exactly.
of the firm. In our case, we went into compliance first. We didn't go the controller route. I found that we were relatively simple. We were a single strategy fund, no SMAs, one product, like just one master fund, one shadow books to do. We went with an outsource group that I sort of considered at the time like a little army of sub controllers. Now, it never compares to having someone in-house that sort of like sees more of what's going on at the firm and understands the touch points and but for recurring tasks at the AUM we were at, it made a lot of sense. But we went with the compliance, for building the ops team first. In part because of institutional pushback on like, hey, when are you gonna stop being the CCO? When are you gonna add to your compliance team? How much value are you really getting of your compliance consultants? And this is sort of like as we were getting through 500 million, 600 million. And, my goal was to hire someone to turn into the CCO, right? Not hire a CCO directly. I think that developing people is really, really valuable because, one, you just kind of like embed the culture of what you're trying to do. Something that is really important to me is like, how good of teammates are my teammates to my teammates? So I really look for people who are always trying to be as helpful as possible, and I think that shows up in the little things. It's the answers to questions, because sometimes there's a very simple answer to a question, and if you just give them the answer, it's a perfectly satisfactory thing. But ever so often, questions can have sort of like potentially like nuanced answers and path dependent. And when they really analyze a question and they give a really rich answer to each other, I think that really helps. So I've always been looking for people who just seem to have like good teamwork skills, seem to have great, people. I think people have good teamwork skills, have good people skills. And so, a lot of my interviewing, in the early stages of like trying to talk to people is about, how do I think they're going to interact on a team rather than specifically what do they know how to do? Because I feel like, a good team can teach someone new. We're in the middle of developing someone right now that we're super excited about, into a totally new vertical. So, would a controller have worked? Look, we hired a controller 6 months after the compliance person, so it's not like we're talking about a completely different strategy. But um, it's definitely important to have an awareness of what your firm's needs are, and not just say, "Hey, what problem am I trying to solve right now?" But as this, Wayne Gretzky said, skate to where the puck's going, and like put things in the path of where the problems or needs are going to be in the future. 2, 3 years out.
Yeah, and
Makes a lot
I would jump in and say, and I think it echoes both points, but Yulia mentioned controller can mean a lot of things, right? And so I think firms sometimes anchor too much on titles instead of asking what work actually needs to get done. A CFO $20 billion platform, has a large team, established infrastructure, and it's kind of sitting on top of everything where the CFO at a, $1 billion growing fund is in the weeds, building the processes, solving the day-to-day, operational challenges and wearing, 25 hats. They're fundamentally different jobs. So it actually leads to one of the biggest mistakes that I see and have seen over the years is what I call like, the hero hire, right? It's the instinct to hire the most senior executive from the biggest, most recognizable firm. And it feels like the safe decision, right? This person's going to bring all their institution knowledge to us and it'll solve our problems. But the best executive can't succeed if they're hired into an operating model that's not ready for them, right? So growing firms aren't looking for somebody to inherit a mature organization. They're looking for somebody to build it, right? And the next version of it. So sometimes the best hire can be one level down from that. Somebody who's already doing a lot of the day-to-day work and might be, as David said, sort of ready to be developed into that seat. Or it could be, let's say like a second time CFO who's kind of lived that journey previously, help scale a business, grow it, and is excited about doing it again. Those are the two types of profiles I think tend to work in these sort of growing models.
Hey, sorry about that, Chris. So we're going to stay, so we're going to stay right here for a second. Most conversations about what we're talking about gravitate straight to the C-suite, right? So, but the more interesting question, where does the bench actually break first?
Below it, usually, I would say one layer below it, maybe is probably the most common answer. So, you're right. I mean, most firms tend to focus on the C-suite, but I guess what I see is strong leadership with very little depth underneath it in a lot of places, right? And I think this has been brought up by all of us so far already, but too many critical processes depend on one person. And that spreads a senior leader thin. They spend a lot of time working on things that should have delegated, and it doesn't free them up to work on the things that have probably higher value return. So again, we mentioned this before. The same name keeps showing up over and over again. They own different processes. If you hear that, you've probably found your next hire, but it needs to be not a hire to alleviate those things, but to free that person up. So it could be a junior analyst. It could be building some sort of too deep coverage. It could be promoting somebody into their first manager role. But that also can be a place where firms struggle. Promoting somebody into a manager role is one thing. Giving them the support to actually become a successful manager is another. So, David, I think you had lived that journey, a first-time manager problem, I believe.
Yeah, gosh. When I think that transitions are always hard. And we've definitely learned, I've learned from different experiences over time. But when I sort of made two people in particular, CCO and CFO, initially we were sort of in that bucket of like, all right, that used to be my role, but like we really spent a whole year having those folks behave as though they were the CCO, right? With kind of like my support, right? Like it's almost like I stepped into their support role, and it wasn't like I was doing all their work as though they had an analyst. But I tried to be as hands off as possible, and then review the key things, but also with a mind for what someone would do for them, and like in the meetings that we would have about how they felt like their responsibilities were going. It's like, all right, what are the things that you feel are like high value and low value? And, really try to have a mind for when, if we did hire, someone to be in compliance support, someone to be in accounting support, what would that look like? What would those people do? And also just like the time management element of that. Now, one thing I've always tried to do is cross train as much as possible. I've always said that like if you're going to be, the best CCO, you should understand what's going on in the accounting, in the numbers. You should understand what the metrics are. If you're a really great CFO, you should understand the compliance rules. There shouldn't be a lot of surprises that come around the corner. You should understand what the marketing message is. Really, anyone in the C-suite or close to it should be able to tell the story of a firm, right? They should be able to be at a networking session, and if some random institutional thing says, "Oh, I've never heard of your fund. What are you all about?" hopefully by the end of that conversation, they're like, you know what, I'd love to talk to your IR people, assuming they're investors in long short equity. So, gosh, cross training's super important. The transitions are super important. And I think that having sort of the right level of support from someone in the C-suite or someone who's, the manager of the system and process is really key. But like, I think that so many of these things, there's kind of like Indiana Jones with, trying to steal the idol with this bag of sand. You have to transition things nice and slowly and do it just right. If you do it wrong, the big boulder comes and squashes you. So, you gotta, the big boulder can take a lot of different forms in the hedge fund space, from redemptions or angry CIOs or, things going wrong. You never know.
Absolutely. So look, we've been focusing on hiring, but there's a full set of options. Let's address those as well. So David, we'll stay right with you. Start with the line you don't cross. What is on your sort of never outsource list? And has that list changed over a decade?
Well, again, I think it depends on what your firm's all about. But gosh, I mean, I think that after a certain AUM, it's really hard to outsource the CCO at any firm and get a lot of the institutional operational diligence groups to take you seriously. Um, I think that's a tough one, unless you're like seconding someone in-house permanently. But really, at that point, they're they're a permanent employee. And I think that other things come down to tasks, right? Like, I don't think you're going to let any outsource firm completely have control over your cash movements. That's you certainly have them involved, if they're the administrator in releasing cash, that's an important um, thing that everyone wants. But, to completely, outsource that to, some group and, have them moving your cash around, that sort of thing would never work. The other thing that we experienced was even if it's their job to sort of be building your shadow books over time, uh, they can't have it's really hard, I think, to have final sign off because there's just nuances to the underlying positions, right? Like they might enter something in as a dividend and like it was a dividend, but later on it gets classified as a return of capital. And like that's a hard thing to pick up on if you don't know what the position is and have an eye out and like calendarize things to, have on your to-do list to follow up on. There's just such value in being in the weeds with the team. We have a weekly or biweekly ops meeting, depending on people's schedules, where we just go through whatever is most important on anyone's plate at any one time. And the things that it shakes out and just surfaces about people like, wait, what is that? Why is that important? And people really learn. And then it's a great opportunity for anyone who's experiencing anything or discovered anything to just go in and start educating the rest of the team. And then you like get people raising their hands later on, be like, wait, I saw this thing. Wasn't that like something that we were supposed to look out for? And it's like, yes, yes, thank you. So definitely, um, that it's very important to have that cross training and broader understanding. That internally and not rely too much. I don't think we've relied too heavily on outsourced folks. I think that the things that we've outsourced are very standard. Um, you know, Obviously we're not going to administer the fund internally, things like that.
Yeah.
We're
Okay.
not going to build our own IT firm. We use an MSP. Um, that's not the sort of thing that we're probably do. But I'd imagine firms with hundreds of employees probably do have their own internal department and aren't using MSPs, that sort of thing.
Yeah.
Absolutely. Yulia, what do you think?
Yeah, I'd say the question is not always just have it in-house or outsource. And really, what you're looking for is, are you mitigating the risks you see within the organization? Do you have somebody who is accountable for the process itself? I've seen dual-headed CCO arrangement that worked because the person had actual authority and they can actually stop things from happening. And they also have time to dedicate to that position. And I've seen dedicated in-house compliance people just with no real ability and accountability and no teeth. Structure doesn't guarantee substance. Um, yeah, I think the honest risk in dual heading works right up until the day it does not. And you usually find out in those due diligence meetings when it is a very costly thing to find out rather than in quarterly review. I would treat outsourced providers as an extension of your team, as an ability to help you in difficult time. Again, as David said, in transitions, those when you rely more heavily on them. But you always want to have someone within the firm who is answering those questions, who is responsible for the program. Um, and it's great if you have the binder and everything is laid out and beautiful policies written, but due diligence requests, they will test you if you're actually following those policies, and that's when the problems come up. And even in transition, I like what David said in regards to making sure that people are aware not only about their roles, but about the roles of others so they can spot things that they can cover, they can think alternatively. That cross training and exposure, I think, is very, very important. Um, the broader question is what is really happening when you're moving, from $5 billion platform to a smaller firm, and what things you can kind of forego and leave behind. I think within the larger organization, you have a lot of people, and again, that information is really important to be disseminated. I remember being just a ping pong ball, and I would go from my, GC's office to my CFO's office to my CEO office to my head of marketing to my head of risk, and that would be my round every single day. And I would make sure that they were aware of any kind of issues that we're working through, any new initiatives, any new implementations, reporting, everything. And so the larger firms, you want to bring everyone together. So you have big meetings and committees and memos that go between the different departments. Everything is documented very well, kind of the process is laid out. And again, everyone needs to be aware of what's going on because there's a lot of moving of information between departments, and it's really, really important that everyone knows what's the latest information. However, in the smaller firms, you're talking to each other. You're probably sitting next to each other. You're much closer, and the information is kind of everyone is aware of things without needing to have formal meetings, formal memos, um, uh, things that are moving between different departments and handoffs. So definitely think what is your structure looks like, how many meetings make sense to have, and how many meetings can be an email. And that is definitely will save you time and depending on your complexity. But again, remaining with the discipline that everyone is aware of what is happening within the organization, what initiatives are there, how things are changing, what risk factors we have, what problems we identified, what we're working through and towards. So that information still needs to be disseminated. Everyone needs to be aware, and your portfolio manager needs to be aware of all your operational things that are going on. Maybe not in so much detail, but they should know what's going on the other side of the organization. The test I'd offer, does this control exist because of risk? Because truly you need something, or because you have a lot of people and just a headcount problem? Bring the first one, leave the second one.
Okay, thank you. Chris, let's move on to fractional. So when is it the right answer? And frankly, when is it a way to avoid a decision?
Right. I think fractional works best when there's a clearly defined objective, like a clear scope. Everybody knows what success looks like when it's project based. It's building towards something, not replacing something indefinitely. I think it's most underutilized with firms, building new capabilities. So I see firms all the time. They want to launch a new initiative, stand up a new function, and their default is they go make an expensive full-time hire for an executive before they even know if it's going to work. The fractional leader with expertise in that area gives you like a much lower risk way to kind of prove the concept. They can design the function, build the process, help you determine whether the need is real, and whether it would justify ultimately a permanent hire. And it's a more kind of disciplined way to invest your money, right? The other place that we've seen it be incredibly valuable is actually developing your internal talent. So this goes back to what we were talking about before. So, in the example where you have a controller who's capable of becoming a CFO, but they're not quite ready today. And we just actually had this exact example with a client of ours. Rather than hiring over them, you could bring in a fractional CFO to work with you for 5, 10 hours a week, something like that, to mentor the controller, coach them through the transition, help them grow into the role. Think of it like executive coaching, but with real operating experience. And to answer the other part of your question, Kurt, I mean, where it doesn't work is when it's used as a way to kind of avoid making a decision. There's no clear objective, no clear project, no intention of building something internally. You're just punting the decision without getting anything out of it.
Okay. Thank you. So, I mean, what we're ultimately talking about here is, build, buy, borrow. And David mentioned actually, develop. It's a key point, which we'll get to. We've got about 10 minutes left. So I'm going to ask again for the responses to be a little bit more concise. We have a couple more sections to get through that are important. We're going to start talking about passing ODD without overbuilding. So, David, you've sat on the wrong side of this table with a very sophisticated LP watching, I think you had mentioned. So what do allocators actually test that firms don't expect? Again, if we keep the answers concise.
Yeah, absolutely. I mean, I think that once you've gone through enough ops DD reviews, you sort of have an outline of like what the table stakes are, what the common things that they're all going to ask. But what's remarkable is the things that are unique, right? And you're like, whoa, like I did not expect this allocator to care this much about something that no one really cared about. And usually it's something that you don't really have necessarily prepared for the meeting, right? Like before these ops DD meetings, like if they're done either in person or over Zoom, we're ready to do screen shares. We have all the documents ready on our computer. We want to keep things moving. No one wants to spend time digging, and the last thing you want to do is forget where something is, and not give the impression that you don't know what your file system at the very least is doing. But sometimes they ask you things that are not prepared, and gosh, you just have to be asking yourself all the time, what's next? Like where are things going? I've sort of just for fun sort of referred to the evolution of ops DD as ops DD inflation, right? Like things change, things evolve, the expectations get harder. Firms do things wrong and then they're like, wait, we got to get ahead of that the next time. There's a big problem that happened. So it's it goes beyond, cash movements and things, and it's more about like what is the overall quality of how well all the people on this firm, on this team know what's going on. And the allocators that are, I think, doing the best job are getting the canned answer that might check a box, and then they like ask a question that's like a little bit deeper. And sometimes when they ask a question that's a little bit deeper, it can be a little bit of a learning experience. It's never been a deal breaker for us and like a deal killer, but it is an area where you powwow at the end of the movie. You're like, what? At the end of the meeting, you're like, wait a minute, like we need to get better at that thing, right? And we need to start thinking ahead of stuff. And we've been doing that for years, and I think it's been really helpful.
That's great. Yulia, your thoughts on this?
Yeah, I would say the fastest way to kind of tank the deal or make sure, showcase that you don't know what's going on is to have three different functions tell the same story, but three different ways. It's definitely important that everyone is very consistent, and it is sometimes more important than sophistication. I would say also to know why you're doing certain things or not doing certain things. David and I actually were talking about yesterday. I said that the $5 billion fund, we didn't have our internal GL, but we were able to explain why and how we validate our numbers on a monthly basis. And also, how do we think through the process and where our risk lie? And we were able to convince our LP base that that was not a necessity, which is not very common. Sometimes on overbuilding, since Kurt is going to ask, the money I've seen wasted is almost always spent on things that are visible rather than things that are load bearing. Um, and generally, buying a system before fixing the process is probably not the answer. You want to make sure that you know what you're trying to fix. And if you're bringing on the system, that you're making sure and doing enough due diligence and perhaps like proof of concept with some of the vendors that they can handle whatever the risk you're trying to mitigate. And having just the policies we talk behind a library that nobody in the first can describe is really going to showcase the lack of true controls. Um, and again, allocators are not looking that you just have a very documented process and you, they're looking that everyone is aware of the risk of the organizations, how you're mitigating what's actually happens on the day to day, and if you're following the process. I remember the first time we were bringing AMA due diligence questionnaires, and I remember looking at the binder this thick. But you want to pick what's important for your organization, and that would answer the due diligence questions. So
And
yeah, overbuilding is costly. Now, I do want to point out that something we haven't touched is that there's a lot of technology coming to our space. One of the interesting things that I impatiently waiting is something that's called company brain, and there's several AI companies that are working on this problem, and I think it's going to be a big change within pretty much every industry. And what it is that you have agentic sort of context layer of every decision ever made in the organization, every conversation or memo that ever been documented, all your policies, and you can kind of continue that institutional knowledge even when you lose someone within the organization who was in charge of that function. So really excited about what's coming to all of us.
that's good. So let's talk about the last of the four pillars. Right, we've talked about hiring, we've talked about fractional, we've talked about to a certain degree transition. Let's talk about development. And here I'm going to apologize to David and Julia up front. We have time for an answer or response from Chris, and then I'd actually like to get to closing remarks. So please feel free to say whatever you want to say at that point. Um, so, Chris, the hardest call a founder makes at this stage isn't about a candidate; it's about somebody already on the payroll. So, before a founder ever gets a candidate, what's the question you make them answer first?
I don't make them answer, but I try to get them to answer, let's say. But ask them, if we found you the perfect candidate today, or you bring them on board, like who inside your organization is going to be disappointed? And the name that comes to mind immediately is obviously worth discussing how you move forward with that person. But sometimes, the best investment isn't a search. It's about giving somebody already in your team an opportunity. I think both the other panelists have brought this up a few times, but doesn't mean promoting somebody because they've been there the longest or they're most loyal. It means making a true and honest assessment on whether they have the potential to grow into where the firm needs next. So if you answer that question by saying not yet, that doesn't also mean hire over them. Sometimes the right answer is giving them coaching, mentorship, experience they need to get there. But whatever you decide, communicate it early in the process is what I would say. If you're investing in somebody's development, tell them what the plan is, why you're doing it, what they need to demonstrate, what success is going to look like. If you are deciding to hire externally and layering them, for lack of a better term, explain to the current internal employee why, how this new person complements the team, what that means for their opportunities, and how that might, how they might still be able to exist with the firm. But the biggest mistake is leaving people to kind of create their own narrative around why this is happening.
Absolutely. So again, hiring, development, retention, transition, and frankly, the last three are where compounding, tends to happen. So let me close by asking each of you for one thing that this audience should do. If we can hold our responses to about a little bit less than a minute, that'd be great. David?
Sure, yeah, happy to go. I think that if you're really like doing an honest, ongoing feedback loop type evaluation of your team, you always need to say, what's everyone doing? What are their responsibilities? And what would happen if they just sort of like ceased to exist or had, a 1 month coma or just whatever bad scenario you can think of? And what does that mean for the firm? Is it a huge problem? And if it is, that's when you need to be like making your next investments. All right. You need to be thinking, you can't just like let that hang out there as like, oh gosh, hopefully that doesn't happen. You need to get ahead of those sorts of things. And so, always be, not always, but like, say, hey, on a quarterly basis, when you're sitting down with the other members of the C-suite or whoever is relevant on your team, be asking that question and saying, what can we be doing to get ahead of it before there's an actual problem?
Thank you. Yulia?
Yeah, I think I echo David's response in a little bit different light. I've had a chance to build teams from ground up, and I had a chance to step in roles where things were already well established. I think at every position that I've had, I always think about risk for organization. What is a true risk? Where it comes out? Where were the errors identified in your process? Because you will encounter errors no matter what. They will happen, be that on the administrator side, on your side, in process, in timeline. Where those issues arise, and the most importantly, how you're mitigating them for the future. And I think also think about, can you take a vacation as a role that you're fulfilling? Can you step away and make sure that everyone is accountable, everyone knows what they're doing? And that is something that you build with understanding your team, understanding your providers, understanding their experience level, what they can handle today and what you would like them to handle later. Overall, cross training, relying on reputable administrators and their teams, system design, and what goes into the system, kind of ensuring that you don't have garbage in, garbage out problem. All of those are very important decisions to look through, and definitely look through the perspective of risk. But start from the top, where your controls. What are the largest risks, right? You don't want to be in the Wall Street, front page that you wired 40 million into a wrong account or something like that. So cash controls will definitely come up first. And again, everything else, I try to look from perspective of risk because it's going to be unique for every organization.
It was a big
Thank you.
moment when I finally went on vacation and I only had to use my phone and I didn't have to open my computer. I could answer. I'm never
Wait,
going to not answer
what is
questions,
it? What is that? What do you mean? I don't understand what you're saying. Yeah, so Chris, your closing remarks, please.
Yeah, I would say, obviously, if you're hiring for a growing firm, think about the hire today and how it impacts that firm that you want to have 3 years from now. So, am I hiring for today's problem or for the company I'm trying to build? Too often, firms are just hiring somebody who can do the job today. The best investment is somebody who can do the job today and has runway to grow into the next role as the business scales. So, don't just hire for the role you have, hire for, the leader you want to develop next.
Cool. I'm actually going to jump in here because I actually feel strongly about this. I'm a big believer in fundamentals, blocking and tackling, right? There's no championship team that doesn't excel at that. And that's something that you work on, so every single day. And that's combined with also, obviously, planning for what's coming next. So really, there's three questions I would ask. And again, very basic, but you have to ask these questions and answer them in a disciplined manner, right? So where's the firm today structurally? That's already been mentioned. Where does it need to be in 3 years? And most importantly, connecting the dots, right? So what are the bridges that you have to start building now in order to actually get there? The tendency is to be reactive, despite the fact that we give lip service to being proactive. But the reality is there tends to be reflexive and reactive actions that we take, and really the less we can do that, obviously, the better off we all are. So David, Yulia, Chris, thank you very much. That was truly excellent. In fact, I allowed you guys to run on a little bit further because I thought the content warranted it. So We have about 5 minutes left here for Q&A, and I actually have already spotted a couple of questions I think that are excellent questions, and one for each of David and Yulia, so I'll ask that now. And then for those of you that we aren't getting, won't be able to get to, we do encourage you to reach out to us with any questions, and we're happy to set up a call or what have you to explain or to talk about it. So, and I'm speaking about Chris and myself. I don't mean to put David and Yulia, obligate them to anything at this point. So, the first question, David, to you is, as firms move beyond founder-led stage, what are the earliest indicators that a key function, finance, compliance, operations, IR, technology, has become too dependent on one individual? And what steps have you seen successful managers take to mitigate the key person risk before it becomes an issue in operational due diligence?
Yeah, I mean, I like the fact that, anyone on the ops team can be referred to as a key person, because I really believe that, and I think that's a good thing. I mean, obviously you don't want to create bottlenecks and problems down the road, but you definitely want to, have good people. Look, a really simple answer is take good care of those people. Like, be nice to them, give them responsibility, tell them they're doing a great job, make it a great place to work, so they don't want to leave if they are in that, brief, in that period of transition where they've become really, really critical, right? Like the worst you could do is have critical people that you're not nice to. So, I'd start with that. But, that's definitely the time to be thinking about what support do they need? What's a symptom? Answering the question. I mean, it's sort of it's a little counterintuitive, but like, gosh, if they seem less responsive, overworked, really busy, and maybe having a hard time, doing things with as much care as they would, that's definitely, sometimes it could look like less good work, but it actually might mean there's way too much work. I ask the same questions at my service providers, because sometimes I have people in my team be like, oh, this person and, at our administrator isn't doing such a good job. I'm like, well, is it really because they're doing a bad job, or is the administrator just heaped upon them way too much work? And I go to those people's boss and say, hey, answer this question fairly. Like, are you happy with the person's work, or are you understaffed on our account? So, you still always have to be asking these questions of like, what's going on at the fundamental level that's driving symptoms. And sometimes it's a really good thing.
Okay. Thank you. Yulia, for you, we've got a couple of minutes here. So what is the biggest difference in the CFO role today versus 10 years ago? For example, everyone's trying to figure out how AI can be used in the organization at all levels, including the investment side and financial reporting. How are you evaluating the many products that are available?
Yeah, I think it's probably today more than ever, it is very important to stay updated on all the developments within our kind of, financial universe and beyond, actually, because the tools that we're developing and sort of the IT world that is always so far from the finance is sort of coming to us and actually helping us to be more efficient. So I stay very in close contact with vendors, seeing they're developing, asking them the questions, what their runway looks like, how they're implementing AI in their process, and also actively implementing it within our organization across all functions. So, but you can't just give a tool and not give a training. It's important that people know how to utilize those tools. And so if it's taking hackathon trainings, dedicating time and resources to those tools is also very important, so that you don't have just, a tool that nobody knows how to use. But I'm very excited about what's happening on the front of AI and all the development. There's certainly a lot of efficiency that all of us can gain from it.
Thank you very much. So, Jason, I'll hand it over to you. First, let me thank the audience for joining us today. And then, Jason, I think you got like 10 seconds. So
10 seconds is all I need to thank you guys so much for putting on an incredible panel. I found it extremely interesting. I learned a lot, and I have a lot of great takeaways for myself and hopefully all the viewers as well. Thank you again, and enjoy the rest of your day.
Thank you.
thank you.
Everyone.
Thanks.